Named peril and open peril describe what kinds of losses a policy covers. The clearest example is a named peril policy covers only listed causes of loss. The explanation starts with an open peril policy covers causes unless they are excluded. The consequence is that difference can decide whether a claim is paid. Named peril coverage is list-based. For example, if fire, theft, and wind are named, those causes may be covered under the policy terms. The reason is that anything not listed may be outside coverage. That can mean the list becomes the starting point for claim review. Open peril coverage starts wider. In real life, it assumes coverage for accidental loss unless the policy excludes it. The pressure comes from this. The exclusion section becomes extremely important. The result can be wide coverage does not mean every possible loss is covered. The burden of explanation can feel different. Think of with named peril, the insured often needs to connect the damage to a covered peril. The process works because with open peril, the insurer may point to an exclusion if denying. Over time, the claim conversation can change based on structure. Home policies may mix both approaches. A simple case is this. A building might be insured on open peril while personal belongings use named peril. The important driver is that one policy can treat property categories differently. That is why customers should not assume the whole policy works one way. Fire is a common named peril. You might see it when if a covered fire damages a room, the cause fits the listed event. What matters underneath is that the remaining question becomes limits, deductibles, and conditions. If it is ignored, a named peril can still have rules around payment. Gradual wear is often not covered. One ordinary version is a roof aging slowly over years is different from sudden storm damage. The mechanism is that insurance usually focuses on accidental events, not maintenance. The practical effect is open peril policies often exclude wear and tear. Flood and earthquake are often special cases. Consider many standard property policies exclude them unless added separately. The hidden part is that open peril wording does not automatically override exclusions. The outcome is often that large exclusions must be checked directly. The wording of the cause matters. The pattern shows up when water damage from a burst pipe may be treated differently from long-term seepage. The moving force is that similar damage can have different causes. The risk is that claim outcomes often depend on the event that created the loss. Named peril policies can cost less. In a daily situation, narrower coverage may reduce premium. The link is that the trade-off is more uncovered scenarios. Once that link matters, a lower price should be compared with the risks the buyer is keeping. Open peril policies can provide broader protection. The clearest example is they may be useful when the buyer wants fewer gaps. The explanation starts with broader wording usually costs more and still has exclusions. The consequence is the extra premium buys a wider starting point. Exclusions are not fine print decoration. For example, they are part of the coverage design. The reason is that mold, pests, neglect, intentional acts, war, or government action may be excluded depending on the policy. That can mean skipping exclusions creates false confidence. Claims adjusters look for cause of loss. In real life, they examine photos, reports, timing, and damage pattern. The pressure comes from this. The cause determines which policy wording applies. The result can be documentation helps connect the facts to coverage. A real example shows the difference. Think of a stolen laptop may be covered if theft is named, but a laptop lost in a taxi may not be. The process works because open peril might treat accidental loss differently unless excluded. Over time, small wording differences matter. Another example is wind-driven rain. A simple case is this. Damage from a storm opening the roof may differ from rain entering through poor maintenance. The important driver is that the visible water stain does not answer the coverage question. That is why the cause behind the water matters. Policyholders should match coverage to real risks. You might see it when a coastal home, older building, expensive electronics, or rental property may need different wording. What matters underneath is that the cheapest policy can leave the biggest gap. If it is ignored, risk should guide coverage selection. Reading only the declarations page is not enough. One ordinary version is the declarations show broad limits and forms, but not every covered or excluded peril. The mechanism is that the policy wording explains the promise. The practical effect is buyers should review both documents. Ask direct questions before buying. Consider which perils are named, which property is open peril, what exclusions apply, and what endorsements are available. The hidden part is that specific questions produce better answers. The outcome is often that general reassurance is not enough. Named peril asks whether the cause is on the list. The pattern shows up when open peril asks whether the cause is excluded. The moving force is that single distinction can make confusing policy language easier to read. The risk is that the claim depends on wording, cause, evidence, limits, and deductible. Named peril and open peril policies becomes clearer when it is tested in ordinary life. Take fire named in policy. The point is visible in a fire listed in a policy. The choice changes because named peril and open peril policies changes the pressure around the decision. What matters is the real consequence for the people involved, not just the clean definition of named peril and open peril policies. When the example is concrete, named peril and open peril policies stops sounding abstract and starts looking like something people deal with in real conversations, bills, deadlines, and relationships. Another useful angle is theft listed as covered. A flood exclusion shows how one background condition can change the outcome before anyone calls it a big event. For named peril and open peril coverage, the hidden force is the burden of matching the loss to the policy language. Once that burden is clear, the cause of damage matters as much as the damage itself. The real difference appears during a claim, when the question becomes whether the damage fits a listed risk or falls outside an exclusion. A weak reading asks only whether something was ruined and misses whether the cause is covered. In the case of accidental damage under open peril, the final result may look simple from the outside, but the pressure was already building before anyone noticed it. Better judgment starts by checking listed perils and exclusions before assuming protection exists. A practical example is exclusion removing flood. The practical point is not to memorize a slogan about named peril and open peril policies. The practical point is to know whether the policy starts narrow or starts broad and then removes exceptions. That contrast explains why the cause of damage can matter more than the damage itself. Most confusion around named peril and open peril policies comes from missing that hidden exchange and focusing only on the surface event. Named peril coverage asks whether the cause is listed. Open peril coverage starts broader, then asks whether an exclusion removes it. A final example, claim denied because cause is not listed, shows why this matters before the outcome becomes expensive, stressful, or emotionally charged. The strongest takeaway is to read coverage and exclusions together, not separately. The practical point is to know whether the policy starts narrow or starts broad and then removes exceptions. Once those parts are visible, named peril and open peril policies becomes less mysterious and much easier to handle in daily life.